Did you know that despite the US federal R&D tax credit allocating upwards of $12 billion annually to fuel business innovation, a staggering 70% of eligible startups fail to claim it due to misconceptions about qualifying activities? Well, if your business is one of them and you're trying to understand how you could potentially tap into the innovation incentives available to you, stay tuned. So welcome again, it's Deji Balogun, innovation partner here at DB Innovate, with years of experience assisting over 300 small and medium businesses, as well as some of the top leading global Fortune 500 companies, secure innovation incentives available to them. Today, I'm going to be walking you through and discussing the R&D tax credits, particularly focusing on the qualified research expenses, also known as QREs. If you haven't watched my earlier video where I explain and give a brief introduction of the R&D tax credits, you can go over and watch my video here to get an overview of what the innovation incentive is all about. For those of you unfamiliar with the R&D tax credits, it's a government incentive to encourage and boost innovation within the United States. It achieves this by allowing individuals and businesses like yourselves to deduct dollar for dollar annual qualified research expenses against your federal income tax liability. This typically amounts to about 6% up to 10% of your qualified research expenses. Or if you're a startup with no tax liability, you can deduct the R&D tax credit against your payroll tax up to $500,000 as of 2025. So back to the focus of the video. What are qualified research expenses? Well, qualified research expenses, according to IRC Section 41, are the expense items that are incurred by your business during the tax year in performing work related to the research, development, improvement, direct supervision, or support of individuals doing that research, development, or improvement work. Qualified research expenses, or QREs for short, include the following items. 1. The portion of W-2 wages to you and your employees. 2. The expenses on contractors or contract research hires. 3. The expenses on supplies such as materials, raw materials, and prototype. And finally, 4. Cloud computer rental expenses. Examples are your cloud hosting or cloud computing costs. These costs would have been incurred during the tax year in carrying out research, development, improvement, direct supervision, or support of individuals doing that research, development, or improvement work. Let's break it down a bit more. Wages. If you have employees in your business performing any work such as the research, development, improvement of anything such as a product, process, software, formula, invention, or technique, the R&D tax credit allows you to deduct 100% of the time they spend on the research and development of those products. Let's take a look at a quick example. I hired Joe Blogs, a software developer, to work on a project to develop a software platform. I am paying him an annual wage of $100,000 and he spent 100% of his time on the research and development of the software platform. 100% of his W-2 wages will be eligible for the R&D tax credits as QREs. That is qualified research expenses. Similarly, I hired a project manager whom I pay $150,000 annually to support the development of the software platform. If she spends 70% of her time coordinating and managing the multidisciplinary teams working on the project to achieve its development goals, 70% of her wages would be eligible for the R&D tax credits as QREs. In total, out of incurred total wage QREs of $205,000, that is 100% of both the portion of time my software developer and project manager spent on the research activities during the tax year. So contract research expenses, CREs. If you outsource the research, development, or improvement of anything such as a product, process, software, formula, invention, or technique to third parties, the R&D tax credit allows 65% of the portion spent on research, development, or improvement activities towards QREs, including direct supervision and support. In addition to this, the research must be performed on your behalf. That means the presence of a contract or written agreement. You must also retain rights to the results. Now, it doesn't need to be exclusive, but you should establish some form of rights. If payments are made to what is called a special consortia, then that 65% cap is extended to 75%. A qualified research consortium is a tax-exempt organization organized primarily for scientific research. It doesn't include private foundations. Lastly, if payments are made for research related to specific entities, examples are eligible small businesses, higher education institutions, and federal labs, then 100% of those QREs can be claimed. Generally speaking, contract research expenses will fall into the 65% cap, with the exception of payments made to special consortia, higher education institutions, eligible small businesses, or federal labs, which can range from 75% to 100%. And then in terms of the requirements, they're just 3 items to remember. An agreement must be entered into before the research is performed. What that means is there should be some contract or written agreement to meet this. 2, the research must be performed on behalf of the taxpayer. That means you have to retain rights to the results. Like I said before, it doesn't need to be exclusive. 3, the taxpayer must bear the expense even if the research is unsuccessful. What it means is that payments cannot be contingent on success. Now, let's take a look at an example. I outsourced the research and development of a function of my software platform to Ava Baxter, a contractor who specializes in software development. If 100% of that outsourced work is on the research, development, or improvement of my software platform, then 65% of the total 100% in expenses paid to Ava can be claimed as QREs. If I paid Ava $100,000 and 100% of the work was on research, development, or improvement activities, then I would be eligible to claim $65,000 as QREs. Likewise, if only 50% of the $100,000 was spent on research, development, or improvement, with the remaining 50% going to some other activities which did not qualify, then I would be able to claim 65% of the eligible 50% in total expenses paid to Ava as QREs. In figures, that would amount to $32,500. When helping you prepare the forms and compute the credits, this is something we go through and discuss with you, so don't worry for now if it's a lot of information. The important thing you need to know is CREs are typically capped at 65%. Supplies. If you had expenses on tangible or consumable items other than land or property that's subject to depreciation that you used up or incorporated into the research process, such as raw materials, chemicals, or prototypes, the R&D tax credits allows you to claim 100% of the expenses incurred and paid for during the tax year as QREs. Supplies do not include items such as license fees, meals, travel costs, telephone, or entertainment expenses. Prototypes that are depreciable or contain depreciable elements are also excluded, as well as supplies used in non-qualified activities like administrative support or non-experimental testing. Let's take a look at an example. If I spent $250,000 on the materials used in the development of a disposable prototype hardware device during the tax year as part of that research and development process of my new product in conjunction with the software platform mentioned earlier, the R&D tax credit allows me to count 100% of that $250,000 spent as QREs. Computer rental. If you had expenses to third parties during the tax year for the right to use computers in qualified research, such as time sharing or cloud computing, the R&D tax credit allows you to claim 100% of the expenses incurred and paid for during the tax year as QREs. Now, this does not include expenses on items such as laptops, computers, graphic cards, on-site servers purchased and owned by the business. It's more for expenses on external and shared computing resources. There are 3 simple criteria to qualify this expense. 1, the computer is owned and operated by someone else. 2, the computer is located off of your premise to establish it's not an asset owned by you. And lastly, 3, you're not the primary user of the computer. That means it's not owned by someone else and located elsewhere, with you being the only user. Computer rental costs are distinct from supplies in that they include rentals and are specifically for computers, while supplies do not include rentals and typically exclude properties with depreciable elements such as computers. So let's take a look at a quick example. If I spent $180,000 on cloud computing services provided by, say, Amazon, Google, or Microsoft during the tax year as part of the research and development process of my new software and hardware product, the R&D tax credit allows me to count 100% of that $180,000 spent towards QREs. Looking back at all of our examples and expense items, we can see that we now have a total of $700,000 in QREs, which can equate to a reduction of roughly 6% to 10% of your federal tax liability. Or you can use it to offset your payroll tax if you don't have any federal tax liability during the tax year. Okay, So we've covered the qualified research expenses in a lot of detail. By now, you should be familiar with the items you can expense on the R&D tax credits. If that sounds like you, and you like a consultation to find out if this is something you should pursue or how it can benefit your business, or if you have any general questions regarding any of what we've discussed, feel free to like the video, drop a comment, subscribe to the channel, and drop me an email with your name, business, location, and message. Once again, I'm Deji Balogun, Innovation Partner at DB Innovate, here to help you secure the investment to your business to continue to develop, build, and innovate. Thank you.